Hi all. So we decided we'd do another live Facebook video rather than a recorded Zoom video. There wasn't as much detail or changes in Parliament yesterday as we thought there would have been. So I thought it might be just easier just to go live and we can just give some quick updates on what was passed in Parliament last night. So JobKeeper Wage Subsidy, so 8th of April 2020 was the date that the package or the 4 bills were introduced in the Australian Federal Parliament containing measures to implement the government's JobKeeper payment wage subsidy, which was obviously announced a couple of weeks ago on the 30th of March 2020. This bill is the single largest piece of government spending in the history of Australia. So that is historic in itself, and it passed the House of Representatives without any alteration, which again is good to know that I guess all of our politicians are in agreement with the current government and what they're trying to do to help small business and also employees through this most difficult time. So just to recap, employers will receive the $1,500 per fortnight JobKeeper payment before tax for each employee they keep over the next 6 months. It'll be available to full and part-time workers, sole traders and long-term casuals. So importantly, there was no change to the casual definition. So that casual employee must have been employed for at least 12 months prior to the 1st of March 2020. We all thought they may have altered that and reduced to 12 months, but there was no change to it. So that is what it is. I know there's a few employers out there and employees that were hoping it may have been reduced, but 12 months it is. Employers can only claim $1,500 JobKeeper payment for eligible employees if they pay the $1,500 per fortnight to each eligible employee, even if their regular wage per fortnight is less than $1,500. So that's as we discussed before. If they were getting less than $1,500 a fortnight, they still, and let's say they're getting $1,000 a fortnight, you still need to pass on that full $1,500 gross per fortnight. So eligibility of employers. Sorry, it is Thursday afternoon before Easter and it's been a big 3 or 4 weeks. Employers, including not-for-profits, will be eligible for the subsidy if their business has aggregated turnover in both the current and previous years and is less than $1 billion and has fallen by 30% or more. If it's over $1 billion turnover, it's 50% or more. As we discussed the other day, for charitable organisations, the decrease is only 15%, so a little bit less for charitable organisations. According to the exposure draft rules, if a business changes ownership since 1st of March 2020 and the new owner continues to run the same business, the new employer will be eligible in relation to the employees that were employed by the old employer. I know we have one client in particular that I think settled on their business maybe 2 or 3 weeks ago, and they were asking this question. So the answer is, as long as the employees that were there prior to you purchasing that business or taking over the business, and they fit the criteria, being employed prior to 1st of March, if they're casuals, 12 months prior to 1st of March, then you will get that wage subsidy. But I would suggest contact us or your client manager for any assistance in relation to how that exactly works. But that was a big win, because I know there was some discussion on that with this particular client. So turnover calculation, the decline in turnover test is based on projected GST turnover with a relevant comparative period. So example is projected turnover for April compared with April 2019. Okay, so if 2019 you turned over 100,000 as an example, let's keep it simple, If you turned over 100,000 in 2019 and you project that you're only going to turn over 65 for this April, you're 35% down, so you will be eligible, and that is one of the tests. Or you can do projected turnover for Q4, so that's April through to June, compared with the whole quarter last year. The Commissioner of Taxation has the discretion to use alternative test measures as well. So there are some, we've had discussions with some clients that may have had change in circumstances. That is that they may have doubled their business by taking on additional employees and additional contracts. So if they look at their turnover today versus last year, they might be similar, but reality is they are down where they should be. So again, contact us, we can help you through that process, but the ATO, the Commissioner, has discretion in those particular examples to make sure that if you have increased your business, in the last 6 to 12 months, but you still are seeing a decrease, you can still access that 30% reduction number and the JobKeeper payment. So eligibility of employees, who is eligible? I have been through it, but I'll do it again because I think it's important everyone's very clear. You must be currently employed by the employer, including those that are stood down or rehired. That's very important. So if you have stood down employees or made them redundant, you do have the option to bring them back. In relation, if you have made redundancy payments though, there are some complications around that. Again, just please contact us and we'll try and help you through that area if you've made redundancy payments and you do want to bring them back. They must be full-time or part-time prior to 1st of March, and as I said, if they're casual, must be there for 12 months prior to the 1st of March. Must be over 16 years of age as at the 1st of March. Australian citizen or holder of a permanent visa or a special category subclass 444 visa holder, was a resident for Australian tax purposes prior to the 1st of March, and is not in receipt of JobKeeper payments from another employer. So that's very important. You can only elect to get it from one employer. So understand there are people who may have 2 employers or even 3. So you can only get this from one place though. So please elect your place and stick to that place, and the employer will, you'll have documents you need to complete anyway. Eligible employees include employees who are retained, employees stood down without pay after 1st of March, employees let go. So as I said, anyone that you've stood down or let go previously, they are eligible for this. Importantly, the JobKeeper payment is not income tested, so employees may earn additional income. So I did get asked this question in the coffee shop the other morning. So if you're getting the JobKeeper payment from one employer and you have a second job and that person still wants to keep you on, you might be doing 5 or 10 hours a week, whatever it may be, you can still do that to earn additional income. So it's not means tested, and it's something you can add on to your income if it's available to you. Importantly here for apprentices, so all those people out there that do have apprentices, you would have remembered in stimulus, I think it was stimulus number 1 that quickly got superseded by stimulus number 2. But there was the 50% wage subsidy for all apprentices that was through the apprenticeship board. Now, basically this JobKeeper payment supersedes that. So I would, so you can only get JobKeeper for your apprentice or the 50% wage subsidy. I haven't calculated numbers, but I would probably suggest, depending on your apprentices and what year they're up to, probably JobKeeper payment would see more reimbursement for their wages rather than the 50% wage subsidy. But again, contact us. We'll help you through that process and work out which way is the best way for you to go. Importantly, the ATO is going to administer this, which should be interesting. The JobKeeper payment will be administered by the ATO. Eligible employees need to determine if they want to participate in this program by electing into it. We can register you as a group by the looks of it. I haven't seen how we do that yet, so please don't hit us on Tuesday after Easter and go, please register us. We can do it individually at the moment, but I haven't seen how we can do it as a group. Alternatively, as I said yesterday, you can do it yourself online. It's relatively straightforward. Importantly, it's all going to go through your payroll system, through your single touch payroll. So those who are still doing manual, which are, reality is these days there's not too many of those, but if you are doing it manually, it will be slower to process your claim. Those who are using, My QuickBooks Xero or the like, using single touch payroll, it'll be a fairly streamlined approach to sending through the information to the ATO to enable these claims. PAYG withholding and super. Super was a category that I was a little bit unsure about. Well, it wasn't really unsure, but we just didn't have clarity on. We now have clarity. And PAYG, as I said yesterday, tax is still to be withheld from the $1,500 as per the tax tables or your software. And super is payable on their normal wage. So let's try and understand that. What's their normal wage? So full-time employees, let's say you have a full-time employee that earns $2,000 a fortnight. You'll get $1,500 reimbursement from the ATO for that particular employee, but you still must remit super on the full $2,000 for that employee because that's their normal salary or normal take-home, normal ordinary earnings. However, with casuals, if they normally work and get, say, $400 a week, $400 a fortnight, you only pay super on that $400, so that'll be approximately $435 in total, including super. So what that means is that you pay $400 as a wage, $35 as super, and then the difference between the $1,500 and the $435 is what you need to top them up by after tax. So you need to understand that and it's mainly the casuals. Full-time employees won't be under the $1,500 because the $1,500 is the base award. Again, for casual employees, I would suggest contacting us at info@tjorbiz.com.au or your client manager, or even me directly. I handed out my phone number yesterday, I'll do it again, 0410 683 023, and we can help you determine exactly how you do payroll. So it may be complicated the first time, but once we do the first one, I'm sure the software will handle most of that for you. So that's about the majority of what happened last night. I mentioned yesterday about the landlords and leases. So again, there's been no changes there whatsoever. It's now negotiation time with either directly with your landlord or through your real estate agent that you sign a lease with. They can help you with the negotiations directly with the landlord. As I said yesterday though, as Scott Morrison said, these negotiations need to be in good faith for all parties. Looking at your financials, how far you're down, whether you're making any money, are all important parts of the negotiation on rent. And as I said, it really should be, if you're down 30% or more, it really should be that you're negotiating somewhere between 50 and 100%, either rent waiver or deferral or a combination of both. Again, if you're needing assistance on that, please don't hesitate to give us a buzz. Drop us an email. We'll help you navigate through those waters. I understand it's very difficult times for everyone, but we're end of another week. It's Easter. As I said yesterday, it's time to everyone just to try and relax a bit over Easter. Enjoy the Easter weekend as much as we're all trapped indoors, but still enjoy it with your families. And we'll do it all again on Tuesday. So thanks for joining in. It's a bit of a short one today, but as I said, there wasn't a whole lot of changes that we needed to discuss. It was really just cementing what was handed out on the 30th of March. So again, anyone's got any further questions, please drop us an email or a phone call, and we will do our best to help you through this very difficult time. Anyway, everyone have a happy Easter, and we'll catch up next week. Thank you.